Welcome to Macro Money Talk, where we uncover the hidden truths of the financial system and help you protect your hard-earned wealth. Many people believe that holding cash is the ultimate safety net, but in reality, it is the riskiest investment you can hold. Today, we are going to explore 5 critical reasons why cash is trash and how holding it destroys your future purchasing power. While the number in your bank account might stay the same, the amount of goods you can actually buy is constantly shrinking. This brings us to our first major reason. Cash is guaranteed to lose purchasing power because the system is designed for inflation. The economic engine relies on continuous inflation to function, ensuring that the currency in your pocket buys less with each passing year. Think about the price of your daily essentials 10 years ago compared to today. That difference is your wealth being silently stolen. Cash is a tool that is constantly diluted. When new money is printed, the value of the existing money supply must decrease. When new currency enters the system, the average saver is the last to receive it, long after prices have already risen up. By holding cash, you are fighting a losing battle against a central banking system that is mathematically programmed to devalue your savings. Every second you hold onto excess fiat currency, you are effectively paying a hidden tax that erodes your hard work and effort. This phenomenon is not an accident. It is a feature of the modern monetary policy designed to encourage spending rather than saving. You are running on a financial treadmill, working harder just to maintain the same standard of living you enjoyed a few years ago. If inflation is at 3%, you are literally burning 3% of your stored energy and life force every single year. Real money holds value over centuries, but fiat currency is a temporary medium of exchange that was never meant to store wealth. The official numbers often hide the true extent of the damage, making the loss of purchasing power even worse than you realize. Assets like housing and education rise much faster than general inflation, leaving cash savers further behind the curve of achieving their dreams. Storing your wealth in a safe or a low-interest bank account is essentially guaranteeing that you will be poorer in the future. This leads to reason number 2. Cash has no self-growth mechanism, making it a completely stagnant asset in a moving world. Unlike a business that can raise prices or real estate that appreciates, cash is a 0% instrument with no organic growth. Companies can innovate, expand their market share, and increase their profits to combat inflation. But a dollar bill cannot do anything. Cash does not produce dividends, it does not generate rent, and it does not create any value just by sitting in existence. It has no capability for compound interest unless you actively convert it into a different asset that carries some level of risk. Holding cash is like hoarding seeds in a sack instead of planting them in the ground where they can multiply and grow. Eventually, those unplanted seeds will rot away, just as the value of your uninvested money rots away due to economic forces. Real estate owners can raise rents to match inflation, effectively passing the cost down, but cash holders have no one to charge. By staying in cash, you are standing still while the rest of the economic world moves forward, leaving you behind in the dust. Corporations have teams of people working to increase value, but your cash has no team, no strategy, and absolutely no competitive advantage. Even physical collectibles can appreciate due to scarcity. But cash is theoretically infinite and can be printed at will by central banks. The math is simple and brutal. Zero growth multiplied by any amount of time will always result in zero wealth creation for you. Time is your most valuable asset, and holding cash wastes the potential of time to work in your favor through compounding returns. You cannot fight the current of the economy with a stagnant vessel. You need a vehicle that moves with the flow of growth. Reason number 3 is that cash puts you on the weak side of the system, making you a pawn in the game. The financial system is structured to reward those who use leverage and own assets, while penalizing those who simply store their liquidity. When you deposit cash, you are unknowingly financing the investments of others who are brave enough to borrow and buy real assets. Wealthy individuals use debt to acquire appreciating assets, paying back their loans later with money that has become cheaper due to inflation. Meanwhile, the cash saver earns a tiny interest rate that does not even cover the real rate of inflation in the economy. You are effectively subsidizing the wealth creation of the rich by providing the capital liquidity they need to leverage their own positions. The system is a machine that transfers value from those who hold currency to those who hold debt and tangible productive assets. By keeping your net worth in cash, you are choosing to play the game on the hardest difficulty setting with no advantages. In every transaction, you want to be the one owning the asset that generates cash flow, not the one merely holding the cash. The economic feast is reserved for those who take risks and participate in the market, not for those who stay on the sidelines. Your money should be your employee, working 24 hours a day. But cash is a lazy employee that sleeps on the job. To win in this system, you must shift your mindset from a consumer of security to an owner of value and production. Assets provide a shelter against the storm of monetary debasement, whereas cash leaves you completely exposed to the elements of financial policy. Reason number 4 is that you pay a massive premium for safety, trading your future potential for a false sense of emotional comfort. Cash creates emotional stability because the number doesn't change. But that stability is an illusion that masks the destruction of real value. You might sleep better at night, seeing a stable bank balance. But you are waking up poorer every single morning without realizing it. The cost of this safety is the massive opportunity cost of missing out on the greatest wealth transfer cycles in human history. You are trading potentially life-changing returns in the future for the short-term comfort of not seeing your portfolio value fluctuate temporarily. Fear keeps you trapped in cash, but risk is the price of admission for wealth. You cannot have one without managing the other. Avoiding volatility is not the same as avoiding risk. In fact, avoiding volatility often introduces the risk of certain poverty in old age. Cash is often seen as a life vest, but it is a defective one that slowly loses its buoyancy the longer you float. Regret is far more painful than volatility. Looking back and realizing you played it too safe is the ultimate financial tragedy. In the short term, assets are risky. But in the long term, cash is the riskiest asset because its decline is guaranteed. You cannot cross the chasm to financial freedom by walking on the ground. You must accept the height and balance of the tightrope. Cash is a sedative that calms your nerves today while slowly poisoning your financial health for the years and decades to come. Finally, reason number 5. Holding cash delays the process of transferring ownership, causing you to miss the most critical factor: time. Wealth creation only begins when you convert currency into ownership of something valuable, like equity, land, businesses, or intellectual property. Holding cash means you are perpetually in a state of preparation, waiting to start the game instead of actually establishing a position. Compounding needs time to work its magic. Every day you sit in cash is a day you deny your wealth the chance to grow. The train of asset appreciation leaves the station daily. If you are not on board, you cannot benefit from the journey to prosperity. You need to shift from being a spectator with a ticket to being a player on the field who owns the game. The earlier you start the snowball of ownership, the larger it becomes. Delaying this process breaks the momentum of your financial life. Trying to time the market by holding cash is a fool's errand. Timing the market always beats timing the market historically. Your financial portfolio should be a garden of diverse assets, not a barren wasteland of depreciating paper currency waiting for rain. Ownership is the key that unlocks freedom. Cash is merely the tool you use to buy the key, not the treasure itself. The rich are obsessed with acquiring assets, while the poor are obsessed with acquiring cash. This mindset shift makes all the difference. Do not let the sands of time run out while you sit on the sidelines. Take action and convert your labor into capital. To summarize, cash loses value, lacks growth, disadvantages you in the system, costs you opportunity, and delays your journey to ownership. Breaking free from the cash mindset is the first and most important step towards achieving true financial independence and lasting generational wealth. Diversify your holdings into real assets that have a history of preserving purchasing power and growing in value over long periods. Educate yourself on where to deploy your capital, because ignorance is the only thing more expensive than inflation in the long run. Your goal is not to have a pile of paper, but to have the freedom and time to enjoy life with loved ones. Stop letting your money sleep while you work. Wake it up and put it to work so you can eventually rest. Thank you for watching this episode of Macro Money Talk. We hope this analysis has changed your perspective on holding cash. If you found value in this video, please like and subscribe to our channel for more deep dives into the financial world. Check out our other videos to learn more about investing strategies and economic trends. See you in the next video. Goodbye. Remember, money is just a medium of exchange. Do not let it become the end goal or a shackle that holds you back. Keep your eyes on the horizon and your assets in things that grow. The future belongs to those who own it, not save for it. Let your wealth flow like a river, constantly moving and expanding, rather than sitting in a stagnant pond that slowly dries up. Plant the seeds of your financial forest today. It may take time, but the shade it provides will last for generations. The climb to financial freedom is steep and requires letting go of the heavy weight of cash, but the view is worth it. Use your intelligence as your compass and real assets as your map to navigate the treacherous waters of the modern economy. Money has evolved over thousands of years, but the principle remains the same. Store value, in scarcity, not in abundance. Forge your wealth with the hammer of discipline and the anvil of patience. Do not let the rust of inflation destroy it. Let knowledge be your lighthouse. In a world of financial fog, clarity and understanding are your most valuable assets of all. History is filled with currencies that went to zero. Do not bet your life savings that yours will be the exception. The global economy never sleeps. Ensure your portfolio is globally diversified to capture growth wherever it happens on the planet. Build a bridge from labor to capital. Once you cross it, you never have to worry about the daily grind again. It is never too late to start. Whether you are 20 or 60, the best time to move out of cash is now. Rise above the noise of the market and the fear of the herd. See the bigger picture and act with conviction. One small decision today to invest instead of save can create ripples of prosperity that will impact your family for generations. Be the architect of your own fortune. Do not let central banks and government policies dictate the quality of your future life. There is light at the end of the tunnel. Financial literacy illuminates the path away from the trap of cash and debt. Keep your money moving. Stagnant money dies, but moving money creates energy, opportunity, and eventually significant and lasting wealth. Sow your seeds wisely, tend to your investments with patience, and you will surely reap a harvest that cash can never provide. Thank you for spending your valuable time with us. We look forward to helping you grow your wealth in our next video. This is Macro Money Talk signing off. Remember, cash is trash, assets are king. Take care and invest wisely. Goodbye.